Right. Okay, so we're recording this, okay? And good morning, good afternoon, and good evening, ladies and gentlemen. Welcome to the Pip and Run special session here, the Elite Traders University presentation. And we're going to be sharing with you a strategy which I perfected while I was working at the brokerage. It was part of a larger strategy. And again, I normally in a mentorship, it's a 12-week undertaking. And it's, it can be pretty pricey for some people, but I want to break off just a piece of it. And the piece I'm going to give you is a powerful piece that will allow you to make money consistently in the market, especially, and also not only that, I'm also going to show you how to use OPM, other people's money, to trade the ORB, the opening range breakout. Okay. So very cool. So just go ahead and make sure you stay to the end, and I'll make sure you get the copy of this so you can rewatch it as often as you like. And if you so choose to, if you want to find out more about how to work with me on an ongoing basis, and hey, this guy's pretty cool, I'll work with him, or he's a jerk, don't want to hear from him anymore. Just anyway, I'm going to give you a link to book a call with one of my team, and then you can actually get some more. I got some more goodies for you: a compound day trading blueprint, which my associates will share with you a one-on-one at the end of this broadcast. Okay, so let me go ahead and share my screen real quick, and we got some good energy. You guys ready to learn how to make some money today? Who's ready to be? Who wants to be a millionaire? Right? You remember that question? Remember that game show? Right? But the thing about it is it's not that far away nowadays. It's not that far away. Okay, in the old days, it's like, hey, I got a $500 account. I'm trying to scale it up. But now I'm going to show you some opportunities where you can actually, I just got $1 million account, and I'll show you how I did it and how to do that. Oh, Carrie, a caption. Let's see if we can activate them. Oh, Carrie. Okay. Is there a way in Zoom to I thought we had. I thought there was a button where you had captures. You know what? In the recording, I can do that. I can add captures. In fact, I can transcribe this into a PDF for you. Okay, Carrie? Okay. Carrie is one of my customers or long-time fans, and he's hearing impaired. So I'm just going to Michelle, just talk to Carrie and tell him that we'll transcribe it later for him. Okay. Okay. All right, guys. Let me go ahead and share my screen with you. Let me share one of these screens here. We're going to share screen number 2 to share, and let's get right to it. Okay. So, and then view, and let's go ahead and get to the reading view. Okay. All right. Elite Traders University. I started Elite Traders University about 7 years ago. Right after I left the brokerage. I used to work for Forex capital markets, and when I left there, I had a live show called Pip and Run. For those of you who don't know, Pip and Run was my live scalping show that the CEO basically wanted me to create something where people would follow me live while I traded, because we had multi-million-dollar clients who had money and were afraid to trade because they didn't have a system. So this is one of the systems I actually used when I was doing that, where I was making hundreds of pips a day for those clients, right? And so it was a great deal, right? Clients are making money. They're typing in the chat box, hey, Greg, we're making money. Great, good. Press the button and make money. They make money too. They made money. The brokers made money off of commissions and spreads, because they make money off commissions and spreads. But guess who wasn't really happy about that? The banks. Remember, the banks take the other side of the trade. So I was like, ring, ring, ring. Hey, what's going on here? We lost like $20-30 million in euro. Oh, well, Greg is doing this live. Whatever he's doing, stop him. And ring, ring, ring. Greg, step in the office. Okay. Hey, what's going on? Sign this. Okay, you're fired. I go, what'd I do? Don't ask. Okay, so I'm sitting at home. I got my system. I'm trading. Boom, bing, 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 bing. Ring, ring, ring. Hey, Greg, who's this? These are your clients who made a lot of money with you. We're losing right now. They got some new guy. They say you're on vacation. When are you coming back? I can't talk to that because I signed something. Can you help us? No, I can't do that because I signed something. Can we fly you to Maui, or can we fly you here? Can we come to you? Well, how much you gonna pay me? Oh, $50,000. I go, hey, well, why not? Come on over. I'll teach you everything I know. So I recorded all that stuff, and that's how I created Relay Traders University. I figured if people are going to pay me for my knowledge, then that'll be a pretty cool thing. But I don't charge $50,000 for people to have access to the system. In fact, the system I'm going to share with you, if you were to go onto this place called Amazon, right, and you buy the book. In fact, I didn't invent that. I say I used it. I brought it back out of the dark ages of where the system came from, right? But you can, if you want to, and you can, if you actually want to go and learn it yourself, and I'm teaching you for free, but you can go on Amazon, you can actually buy the book. In fact, the system was invented in the 1990s. Many of you are probably too young to remember this, but it was invented by a man by the name of Toby Crable, and he wrote a book called, his real obvious title, Day Trading with Short-Term Price Patterns and Opening Range Breakout. That's a mouthful, right? And you can get the book now. It's $595, and it's pretty interesting. But I'm going to boil it down for you. It's not going to cost you $595. In fact, it's going to cost you absolutely zero today. And so opening range breakout. Later, Mark Fisher wrote a book called The Logical Trader, and I think that's maybe a couple $100 now too. But I'm going to teach you this strategy of how this actually works. Okay. So now and I incorporated that in Pip and Run because there's a whole cycle way all this stuff works together. Okay. So this is Pip and Run ORB, or opening range breakout, using OPM, other people's money, right? And so that's what we're going to discuss today. And this webinar is for people who you've struggled with trading, and you made these rookie mistakes that seems to plague you all the time, right? So I'm going to teach you in this webinar, how to access capital, $100,000 or more, and also how to avoid the 5 rookie mistakes the amateur traders make that lead to trading disaster. And then you're going to learn the best times to trade to avoid flat or erratic price action, and also the best days, and also how to make consistent price entries that compound accounts using the opening range breakout. And then also how and when to take profits and keep a good profit from turning into a loss. Okay, sounds fair enough? All right, good. Okay, so let's get into now. Now, helping people make money has been my game. Helping people to narrow the inequality that's going on. We have inflation at 7%. We've got all kinds of things going on in the economy. So learning Forex is more attractive now than it was years ago. When people would come up to me, I would say, "Hey, you want to learn how to trade Forex?" "No, I have a great job. I don't need Forex, Greg." And now we have applications all over the place. People trying to learn how to trade. Okay, so when I looked at this strategy, and in similar, I'm going to tell you a little story. Okay, my father-in-law would take me fishing, and I'm a city boy, don't know anything about fishing. And he would go out, we would get up at 4 o'clock in the morning, and we would go out to, we'd get our cooler, with some beers, adult beverage, and some sandwiches, and we'd go out and we'd go to this fishing spot that he knew. It was dark, and the sun was just barely coming up, and we would throw lines in on the side of the lake in California, Moreno Valley, and then we would catch these fish. And it was really easy. This is kind of fun, drink some beer, catch some fish. This is great, right? And so I said, you know what? The only problem is it's too early in the morning, and it's cold, and it's dark. What if we could do this in the afternoon or something? So one day I just said, let me go I got a fishing pole, and I got some line, and then I just went out. Just went out to some water, right? And I didn't know what I was doing. Well, I went in noon when the sun was up in the sky. It was super, super hot, and no fish. I didn't catch a single fish, not a single one. No bites, no nibbles. I'm sitting there with this rod, I'm with this beer, and there's no one out there fishing either. All right. And I kind of come to the realization that I was in the wrong spot. Okay. I came at the wrong time. It was, because I asked my father-in-law, I go, what happened? I didn't catch any fish. They go, you went to the wrong spot, probably. Yeah. What time did you go? Oh, noon. Well, it's too hot. The fish are gonna go deep, and they're gonna go close. They're gonna go where it's cold and it's warm where you were, so they weren't gonna bite. And you had the wrong bait too. So I set myself up for a loss. They say a bad day fishing is better than a good day at the office, right? But I learned that lesson, that being at the right place at the right time with the right bait can be applied to trading as well. Okay, so I'm going to show you one of those things, being at the right time, and we're going to look at the opening range breakout. Okay, let me pull up a chart. Okay. All right. Well, here's a live one. Am I making one? Okay, here we go. Here we go. Let's try another pair. Let's try the euro. The euro is a really good one to trade. Okay. And I'll show you how to set this up. Okay. So we got the euro. Now, what we want to do is the opening range breakout, right? Is one of the first rookie mistakes is that being there at the wrong time, right? And when we're looking at European pairs, we want to trade when they're the most liquid, and we want to look at Asia is going to be very quiet. In fact, you can look at a chart and say, if you see this flat area of consolidation, right? We can see that this is and I'm going to remove these, not the, I'll remove that, I'll remove the targets. Okay, and then, okay. So here we go. So here is after, so the US closes are like 4 p.m., 4:30 p.m. So it takes us at 1750. And you can see that how everything just went flat, completely flat after the 1705. That would be, we're looking at, like Sunday, right? Let's go. And then we go into Asia, and this is all Asia session. Very tight ranges, and you can actually trade an Asia breakout, but I'm not going to cover that yet. That would be the samurai system, but it's the same process. But let's go. This is Asia, very flat, very flat, very flat. And there's ways we can I actually trade this, but you have to go really small into like a tick chart, or maybe into a 1 minute tick chart. There's all kinds of action going on in micro world. There's all kinds of action going on here, right? But if you're just on maybe 5 minute or 1 minute, you're not going to see a whole lot during Asia, and it's pretty flat. So unless you have a tick chart system like CTrader, I would just avoid it, right? However, as we move through into midnight, right, we start moving into the opening of Germany, right? The German market opens, and there's a range breakout there, but the one that I like trading would be the opening of the Great Britain, the market, the London market, the London Open. The London Open is the most liquid market in the world. It's about 85% of the Forex volume comes through London, and they are, they're considered the capital of Forex. And so when you've got this this much volume flowing through from, so whatever happens in Asia usually gets what we call faded. We say that we get a fade, that London will fade Asia. So whatever direction Asia is doing, we have this fade of the market, right? So let's go here. Okay. So we've got this area here, and Eastern, I'm going to put that in terms of Eastern time, okay? So we're looking at Eastern time, and I'm going to mark it. This is very simple process. I'm going to mark the chart with starting 30 minutes before the opening of the London market. So that'll be 230. So I'm going to go to 230, 232. This is a 5-minute chart, so that should be 230, right? Right. So 230, I'm going to put a line on 230, right? 230, and then I'll put another line at 3 a.m. Okay. You might say, "Oh, Greg, it's so early in the morning." I'm like, well, if you when you get C-Trader, and you can actually do it through FTMO, then you can go tick charts and then you can play this, right? Which can be a lot of fun, right? But for right now, we're going to look at 2:30 to 3 a.m. And I'm looking at something where we can actually take the highest high between the 2:30 and 3 a.m. Highest high is 103.84. And the lowest low, I'm going to make that red, or actually green. I'll make it dark green, right? That's going to be our line in the sand. And then we're going to draw a support line at the lowest low. And I'm going to make that red, right? And I have a 200 simple moving average, and I have an RSI. Now, this is an RSI 14, but I'm also including when I'm setting this up, I'm adding a 50 line, a dotted 50 line. And usually when RSI crosses above 50, it usually gives us a very strong buy signal that we should be buying the market. So it gives us a clue, an indication ahead of time where price is going to be. So I put an RSI, and on top of that RSI, what I usually include is a 9-period moving average, okay? So here we go. I'm going to add this indicator. I'm going to add a trend, and you can do the same thing with MT4, and I'll show you how, right? And we're going to add a exponential moving average, and I'm going to put a 9-period moving average. Now that 9-period moving average is going to almost act like a trend line, right? Oh, I'm not there. I don't want to apply it to the close. I'm going to apply it to the relative strength index, right? And look, RSI crosses the moving average, crosses the 50, very strong buy signal. The sell signal, no, see, this is where we're in the opening range, okay? This box right here. And I'm going to shade this box with usually I shade it with red, with a kind of a light red, right? And then that shows me the range. And then the range usually continues out. This range box will usually continue out, and I'll make it like maybe a powdered blue or something like that. Now, this range that's established between 2:30 and 3 usually extends out for a really long time, for like days. And sometimes price will bounce off that range. And sometimes it will bounce up and tag this range, right? So I have an indicator for MT4, which actually draws it, called the magic wand. Because out of the magic wand, boom, we get a nice break. Now, this is a very clean break. We have a double bottom in RSI. We drew a trend line across RSI. On top of that, another trick, take a trend line and draw it across RSI and look for breaks of that. Okay, I use a red line for supply. This is a supply line, right? And then we get a break, big candle break. You want a full body candle break above the line, above this box, right? We had the box and we broke out. And then usually, and that's kind of telling us that we're going to have this continuation pattern. But we have plenty of time to get in this. We had 5, 10, 15, 20, 25, 30 minutes to get into this trade, one break, and then, we had a big move up. Now, the next, problem people have is taking profit. They don't know when to get out of this trade. They see a big move like that, and then they're getting out and taking profits too soon. I don't know how many people have done that. You've taken profits on something, and then it keeps moving, and you're like leaving money on the table. We can't get broke taking your profit, but if you take profits, and especially when you've got big moves like this happens to be an outsized move, right? Going in 1128, huge move, a breakout, and the breakout continued and continued and continued, right? So we have a couple of things here, right? We can use a couple of methods in order to give us a profit target. I'm going to give you three ways of doing that. One way is identifying that we have what we call a flag pattern, right? We have a flag pull and we have this flag. So we can take a line and we can make a measuring objective. One measuring objective, and we can actually look at that and say, okay, that is, let's see how many pips that is. And from the bottom to the top, we're looking at about 37.9 pips, which is pretty healthy. And you've probably seen all of my trades where I take like 5 and 10. It's like, well, this is like humongous, right? I'm going to take that line and just use it as like a yardstick or a ruler. And I'm just going to tag it on there, right? And that's going to give me my a first target, right? So, and you can see that price. I'm not the only rocket scientist looking at this as well. We have prices actually move there. Now, a more conservative target would actually be the height of the, if I was scalping, I would look at the height of the range. And the range here was 15 point, we got like 16 pips. Let's call it like 14. Okay, so let's say 15 pips. So 15 pips. And if I was placing a stop back there, my stop would be here about 4 or 5 pips below the low, right? So it actually gives me, I'm looking at, 21 pips. So I would need 21 or for 1-to-1. And if I want like a 1.6 to 1, I need like 32 pips, which is where this is, right? About 30 pips right there. And we can see that a couple of things happen. Our RSI is above our moving average line, which keeps us in the trade. And we're cycling above 70, 70, 70. It does break below and gives us a sell, but we basically create another flag, right? And then we really stack there. But we can see that we could, as long as we're still above that 50, we could stay in this market. In fact, when we have placed our stop below here and prices rally, drop, and pop again, we want to move our stop below the last swing, right? A swing is any type of, we have a price action that goes up, pulls back, goes up again. And let's say our initial stop was here. We want to look at this. This is like an elbow. Think of it like an elbow. A lot of people, they'll do is they'll move their stop up here. Price comes down, they get stopped out. How many guys were ever stopped out when price pulls back, right? Well, move your stop to break even and take 50% off. It's like you've heard that before, right? Does that work? Probably not, right? So what we want to do is wait for a price to come up, pull back. When the sellers get smoked, because they're sellers, it's like, hey, we don't believe in this. They start shorting, short. Buyers step in and push price up. When they push price up, what you want to do, when they start pushing price up, then you move your stop up, because now you've got some help. These guys that got long here are going to be protecting this area. And so you wait for the elbow, for the bend, before you move your stop up, right? And so price comes back and swings again, right? Because what happens is people will go, oh, wow, look at the big profit. You move your stop up, and then guess what? You get stopped out, right? So we want to wait for price to make that next elbow again. Where it makes that elbow, it bends and heads back up again. And then we want to move our stop a couple of pips below that swing, right? So we can we call it pip and run, right? You can take fast profits. Like sometimes I'll take out 3 or 4 trades here, wait for the pullback, right? It goes up, move my stop up, and I start harvesting. I'm taking off some here, I'm taking off some here, right? But if you only have 1 or 2 positions on or 1 position on, and you can't take partial, you can take partial off and then trail your stop up in order to lock in gains. And what we teach in mentorship is we take 66% off, take 2/3 off when we break to a new high, and leave 1/3 And that 1/3 that you leave will probably make more money than the other 2/3, if you're in a trending environment. Okay. So that's another tip for you. Okay. So so I tell them they give you 3 ways of finding. We can use a measurement objective of the box, a measurement objective from the flag. We can also be a little bit more, if it won't be really fancy schmancy. Okay. We can use Fibonacci expansions. Okay. And the way we use that is we go to a Fibonacci tool, expansion tool. It's the one that's like the backward 7. And we click that. We go from the low, from the bottom to the top, and now we're here like a Drake song, pull back, right? And so now we have some Fibonacci's, and sometimes they are pretty spot on, and sometimes they're a little off. But you can say, look, if I get 100% expansion, that's going to take me to 104.12. The 1.618 is the normal Fibonacci expansion target, 104.38. And that would have given us, if we got in, let's say we got top ticked, we didn't get to the absolute bottom. We're looking at 59 pips there, right? And again, this is this happens to work out. There are times where if there's news, you want to check your economic calendar, because what can go wrong? You say, Greg, yeah, this goes right, but I've seen these things before, and sometimes they don't go right. And usually, we want to check the economic calendar first. We want to make sure that we, make sure there's not if there's an FOMC meeting at 2 p.m., that is not going to, the market is probably not going to move a whole lot, right? So we want to come over to the My Market heat map. It's the range of currency pairs by percentage change. Tells us what's hopping, what's popping, what's dropping, and what's not, right? And we can see what's in the up move, the down move, what's trending down. It's like a risk off day. We've had some riots in China because of COVID, and that's and it's a Monday too. So down on Monday, it usually is manic Monday. Down on Monday, up on Tuesdays and Wednesdays, right? After Tuesday, Wednesday, and Thursday, and then Friday, people take time off and go for a 3-day holiday, right? I call it the peanut butter and jelly sandwich trading, where I like trading the last week. This is also the last week of the month, and this also month end, which also makes things pretty pretty choppy, right? And but let me show you the economic calendar. This is not just the scanner of all the currency pairs and crypto and indices, but it's also has an economic calendar. It's a one-stop shop, and I love it because I can just look up here and say, okay, what's going on today, and look at what news is going on. Because if there is okay, we have with the Fed speeches going on, we had GDP today, and we also had current account deficit. We can see what's going on for this week. We look at just the high impact items. I just look at the high ones, and then see we have Monday. We have gross domestic product, which is today. Thursday we have UK PMI. So these are the currencies that I'm looking at as the most active ones. Now, trade selection is very important too, and many people choose the wrong thing to trade. Like, for instance, I was trading the ECB rate announcement, so I'm trading euro pairs, right? ECB, euro, I'm trading that. And I had one of my, someone I knew, and they were like saying, "Oh man, trading New Zealand dollar is not moving." It's like, why would you trade New Zealand dollar during Europe when all the activity is going to be in, the pound, the euro, and the US dollar, right? It says, well, it's like my favorite pair. It's like the market doesn't care if it's your favorite or not. It goes back to my analogy. I want to fish in the afternoon. I want to fish when it's warm. I want to fish in the daylight. Well, guess what? The fish aren't showing up. So I can't influence the fish, okay, but I can adapt to what the fish are doing, right? So that's very important to know what's going on, where the activity is. Because sometimes this activity will even go, the pound will probably be active going into like Wednesday, right? Because the market will pre-sell itself, or they'll position themselves going into the announcement. So he said, well, Greg, I don't want to trade news. News is kind of risky, but you can look what's going on, because that news event's going to act like a magnet. So if Aussie dollar is going to have some type of news on Wednesday, well, then Tuesday, then they'll start positioning on Tuesday. So then you can look for this opening range breakout and see, are we leading into that announcement? And then when the announcement happens, well, that's when you'll have all kinds of reversals going on. But people don't wait till the announcement to get in. They start positioning themselves early. Okay. Now, the best times to trade, and maybe people, one of the mistakes they make is they trade at the wrong time of the week, right? And I know people think, I have people that I can trade any time, and there's some people who can. Don't get me wrong. There's some people very talented guys out there, and I go really small time frames, so I can trade anytime. But if you're just an average Joe and you're trading, and you really haven't had any success trading every single day, I would invite you to try this as an experiment, and just stop trading Mondays and Fridays. Because for me, when I was trading and just getting started, the problem was that I was so eager about Forex, because Forex is like 24 hours, so 5.5 days a week. I'm like going, oh man, Sunday comes up, and after church, I am at my computer and I'm pulling up the market, and I'm ready to trade. I funded my account, and then you get these crazy wide spreads and gaps and all kinds of stuff that's going on. I wanted to, digging myself into a hole Sunday, right? And then Monday's not even any better. I'm at work, I'm looking at my phone, and I'm trying to figure this stuff out, and it's chopping it around. So I'm now in a bigger hole. Now, Tuesday, all of a sudden, man, everything just opens up. The patterns are clear, the movements are smooth, but guess what? Now I'm digging out of a hole. So I'm a positive on Tuesday, positive on Wednesday. Hey, I'm at break even on Thursday. I go, I'm gonna make a profit this week, right? Then Friday comes around, and I wind up giving it all back. Let me know in the chat box if you've had that happen to you, right? You dig yourself out of a hole, you get on the good foot, and then Friday you're gonna kill it, and then you wind up giving it back. I think that's the worst thing, giving it back once you've made it. So I created this diagram, right? And so basically the first week of the month is non-farm payroll preparation, right? The first Friday of every month is non-farm payroll. And so a lot of the dealers, institutions, it's light volume. When there's light volume, that's why markets move pretty crazily, right? Because it's light volume. So it's pretty good if you're scalping, you're getting a few pips in and out, right? The first week. But then Friday, you're going to have that big announcement. Non-farm payroll, NFP, is the most important news item, economic announcement ever. If you're brand new to trading and you've never heard of, man, what's NFP? There's a lot of alphabet soup things in the market. NFP, non-farm payroll, and they count how many jobs are created in the US, and that the number of jobs created is very important, because when people have jobs, they have money, and when they have money, they buy stuff. When they buy stuff, companies make money, right? And if people don't have jobs and they don't buy stuff, and companies don't have any money, they start laying off people, then it becomes a self-feeding cycle, right? And the market drops, right? So now don't think that non-farm payroll is going to be good for the US dollar, though. A lot of people think, oh, wow, non-farm payroll, we created 400,000 new jobs, so the dollar should go up because it's good for the US economy. And that is completely wrong, okay? Usually the dollar will, knee-jerk reaction, because there's some people that think that. But then, see, people take dollars and they spend them, right? So they buy cars, they buy stocks, they buy investments in land and real estate. They buy things with dollars. So they're trading dollars. So the dollar actually goes down in value when the US economy is strong, right? Notice how when they're raising interest rates, guess what? The stock market's going down, right? The dollar is worth a lot more. You look at a dollar chart. Let me pull up a dollar chart just to show you, right? Say, well, what's he talking about? What you talking about, Willis? And you guys can still see my screen, right? And you're still there, right? Is this helpful? Is it any nuggets? Let me know. Type hashtag nugget if you're getting some nuggets here, right? Nuggets. All right, nice. Yeah, and the dollar. Yeah, when the dollar goes up, now, and then I had someone go, yeah, I'm gonna get some Bitcoin. I'm like going, oh, you see the dollar. Remember when you look at BTC, it's /USD, right? The dollar and Bitcoin can't go up at the same time. So the moment, okay, let me put up. It's called you can look on TradingView and you go DXY. It's a ticker symbol, the Dixie, right? I'm gonna remove the lines, remove line. Right. So I'm gonna go out to a daily, right? I'm actually gonna go out to a weekly. Let's go out. And don't be afraid to go out to a weekly, right? Because that's another mistake people make, is they trade like pirates. A pirate, arg. Pirates have one eye because they have an eye patch. They have one hand because they have a hook because a shark ate their hand or got sliced off in a knife fight. And they have one leg, okay? I mean, this guy he's a handicap champion, right? So we don't want to trade like pirates. And many people out there make the mistake of actually looking at one chart. Hey, Marie, how you doing? Nice to see you in the room as well. But you see this, what's wonderful, we look at the charts. You want to look at two dimensions on charts, right? Price moves in a higher time frame and lower time frame. And it's like remember those old 3D glasses back in the day, if you're old enough to remember, before they got 3D TV, right? They had these 3D glasses, right? And when you're looking at time frames, you want to look at a higher time frame and a lower time frame. You want to look at, because what people will do is they think they're looking at a trend, right? And they're not really seeing, they're not using multiple time frame analysis. They're only looking at one time frame, and they suffer from time frame relevancy error, right? So we want to look at price in 3 dimensions. We want to look at the higher time frame, which is our compass, like a daily chart or weekly chart. And then our trigger chart, maybe we take a trigger off a 5-minute, but we want to wait for the trigger chart to actually drop if the compass chart is higher. Okay, now I'll show you how that actually works. Okay, so here is the dollar index, for instance, and we're looking at a big time frame there. And some people say, oh, Greg, this is such a big time frame. Who goes out to the weekly? Got to blow the dust off it, right? And it fell a little bit, right? Fell a lot, actually. But it's been an uptrend, a long, long uptrend. And this is the US dollar. And people, when they're raising interest rates, what they actually do when they raise interest rates is they stop printing money. Okay, they slow it, not stop, but they slow it down. Okay, like before, like during COVID, they printed a lot of money, right? And when you have a lot of something, it's called the law of supply and demand. Okay, the more you have, right, the less it's worth. Like dirt. Dirt is cheap. You're the term dirt cheap. Why? Because there's so much of it. You pick something up. How much you gonna pay me for this dirt? Nothing, right? But like in water world, where dirt was like gold, because the whole planet was covered with water, right? And Kevin Costner's like measuring out this pile of little dirt, and and he's like, they're killing each other over this pile of dirt, right? Now think about gold. Not that much gold, except I got some, but it's not that much gold around, right? And gold is valuable because there's not a lot of it, right? And that's the whole thing with Bitcoin. People say, oh, well, there's only so much being produced by a calculation. I'm like going, yeah, digital, yeah, but they're trading the Bitcoin versus the dollar. Are you going to trade your dollars for Bitcoin if the price of the dollar is going higher and higher because the Fed is not printing as much money. They're taking money out of the system, right? It's like taking an addict taking crack off and taking a crack out of an addict or an addict off of crack, right? And so it's the economy is having withdrawal symptoms. Where's my money? Where's my money? Right? So the whole economy is being they're pulling out. See before you look at this chart, you can see all during the pandemic, dollars falling, dollars falling, dollars falling, dollars falling, dollars falling, right? Now dollars rising, dollar rising, dollar rising. What if I put a BTC chart on top of that, right? Oh, where's my US dollar? I guess I got a logarithmic scale. But I mean, if I make it bigger, you can't put them. Oh, I know what I can do. I can't do that. I have to put them in separate. So I'm going to put the separate window, the layout, and I can put side-by-side layouts, right? So on this side, I have the weekly chart, right? Weekly chart's an uptrend. Now on here, on the second chart, I'm going to make this another time frame, maybe and we want the difference of four, a difference of four between our time frames. So this is, I'll make this US dollar. Let's see, I'm gonna make this Dixie too. DXY. Okay, so DXY. And then so this is a 4-hour chart, right? So now we have our compass, our directional bias is up, right? Our short-term bias is sideways, right? So even though we're looking at, and if we went short-term trend, we were actually down on the short-term trend. If I went to a 1 hour, right? So we came all the way down, right? We were in a downtrend. So even though people say, well, the trend is your friend, if you bought anywhere along here, you were screwed, right? So if you were just looking at this as your, the trend is my friend, I'm going to buy the trend. Well, this short-term trend is down. It would wipe all your money out if you tried to buy this, right? So the key is when you have but the overall trend is up. So we want to wait for the short-term trend to flatten out, move sideways, and then we want to look for a trigger for this to go back up, right? So we actually want to wait for, and then we have a double bottom, right? So we look at our patterns, right? Because what will happen is if you see this as a downtrend and try to sell this, and you don't look over here to see, well, look, this thing is bouncing off a trend line, off of a long-term trend line. It's like this. Yeah. This is you guys know what this is? This is this is a flag, right? When you go out of the yard and stuff like that, and if you start digging around this, they tell you, like, the flag usually lets you know that that there's a power line or a gas pipe or electrical or some type of cable TV or fiber optic down below, and they usually have chalk lines. And I had a friend that actually had they were putting a fence in, and the guys who were putting the fence in, they cut through the FiOS and knocked the whole neighborhood out. And everyone runs, I mean, this is like a fire. Everyone runs out of their house like, what happened? We don't have any, and they're like looking at him. He's like, oh my God, you guys you didn't see the flag, right? The flag, because you know why I took it. That's why. No. But that happens in the market, right? Where we're thinking, oh man, downtrend. You're just looking at the short-term chart and you're bearish, baby. Sell, sell, sell. Roar, right? You're going at it, baby. And then boom. And then, okay, I'm shorting. Huh. Boom. What's going on here? Why is it stopping? 105.50? Oh, 50 level. Okay, we're at banker's level. It's not going down, but this is a downtrend. I'm going to go short, and but you don't know that there's a flag that says, hey man, there is a daily trend line underneath this thing, and you're going to touch it and it's going to get electrocuted, and then boom, price is going to go up in your face, right? So sometimes you're like, well, man, they just knew where my stops were. It's like, no, you just didn't know where support was, right? And you can see back here, and that's why, I'm a modern guy. I have a phone. I have two phones, 2 chains. I got 2 phones, right? So, however, I don't trade on my phone because I can't see back here, right? Back here is March. Oh, actually, the 14th, right? The back here is the Monday the 11th. I can't see back here, which is August 8th, 2022. I can't see August 1st on my phone, right? Because I'm looking at this. I'm looking at this, and I'm saying, oh, this is a downtrend. This is a bearish head and shoulders and a downtrend. Oh my goodness, let me short this. And you keep shorting. It's good. But then you're going to add to it, right? And then it's okay, great. It's the trend is your friend, and I got a trend line break. I'm gonna get in here, and I'm going to come in here and short this, right? And and you think you're gonna get a lot of pips out of that. It is actually a lot. 108 to 105 is 300 pips. But if you think that you're gonna get beyond this area, that's where traders mess up, because they don't look over here and see, oh, dang, this is a big, long trend line here. And then, we came off a double bottom here back in January. And if I took a fib from that low to that high, dang, I'm sitting at a 38% retracement at 104.94, whole number, round number, right? This support is there. And in fact, when I see support like that, well, I'm going to drop to dollar CAD, dollar yen. I'm going to drop to those and look for these areas. And what you want to do is map out these support lines. Now, the way I did it with TradingView, notice how I put the fib numbers on this chart, on this weekly, and they actually come over. Look at them. They came over on the 1 hour chart. Isn't that cool? Right? So now it doesn't, it came in the range. It didn't come exactly. Did I snap it exactly? If I, and then I got to snap that one really exact. You got to be really exact with that. So I came really within horseshoes or hand grenades. I'm really close to the low right there, right? And so this area of support, people got scared and go, oh my goodness, this is a Fibonacci on a daily. And the 1 hour people are jumping up at this, right? And so this was a hidden level of support that nobody would see if you did not look to the weekly, right? So a lot of people, no, Greg, the weekly takes too long. We're not looking to trade the weekly. Are you kidding me? I have like 400 pip stop or something crazy, right? But I do want to know where weekly support is, right? Because if I saw this and this came down like that, well, look, it's like, I remember going golfing with a friend of mine in the Pearland area, and they have a golf course, and really green golf course, because Houston has a lot of green areas because it rains a lot there. But I kept smelling bacon everywhere. I kept hearing this electric shock. I'm like going, what's that? Oh, there's wild boars. Wild boars? I'm from California. We don't have any wild boars that I know of. It says, well, yeah, they want to go dig up the they want to go on the green and start digging it up. So they put this electric fence around the course. And I'm smelling bacon. I'm hearing this electrical shock thing. I'm like, like Jurassic Park or something, like the Tyrannosaurus is starting like, and then I've got a shirt full of mosquitoes that have stuck their needles into my shirt. And I'm like going, this is not fun. I know golfing is supposed to be an enjoyable sport, but there's too many things going on. My point of the story is that those wild boars didn't really care about they had heavy fur and fat, and they just charged into that electrical fence. And price will do that too, because once it gets close or it touches it, it's going to shoot up. So you can see how far price shot up from this area. I mean, we went from 105 to 106 just very quickly. 1, 2, 3, 4, 5, 6, 7 hours. We just continued to move an uptrend. Let's put this on a currency pair, and we can see something like that. We can use maybe GBP USD. You can take a look at that, right? And similar things here. Here's our weekly, and the weekly, look, we stopped. But why did we stop? An invisible force field. No. We can drop a fib from the top to the bottom, right? And you can see that a couple of things, that we ran really close to 50% retracements there. But there's all kinds of congestion just before there where people got to the 50. Where people, it gets Now, another thing about this too is like, isn't it interesting that there was a cluster of candles on the 38% retracement, but you couldn't have the 38% retracement unless you have this low that happened, a month later. Think about that. These clusters happen here, but you could not have the Fibonacci level because we haven't connected the low yet, which tells me that this stuff is all fixed, right? They already put the clusters in at Fibonacci levels before the Fibonacci is even completed. So you would already have to know what the destination was before, because look, we're right at the 38, but you couldn't draw the 38 because it hasn't happened yet. This low happens on September 26th, and the cluster happened on July 11th, right? So that is, or is that the numbers back? Yeah, July 11th, right? And this cluster here doesn't happen until May. So these clusters were put in, and then when you connect there, then you look at, oh my goodness. Oh yeah, those guys, they control 95.6% of this market. In fact, you had an incident where the banks, we have a fat finger trader who pressed the wrong button in Citibank and caused the European stock market to drop like 8%, right? Remember that story? Yeah. No, not that one. I'm trying to find. Oh yeah. I'll show you. Like, you don't have to believe me. You can look at it, right. I have it right here, right. Yeah. And then view. Yeah. Really? Well, yeah. Citi says a trader error caused Europe's flash crash. 8% with one push of the button, right? So these guys control everything, right? I used to work for them. So, and when I worked there, this is, the central banks are at the center. I work for Bank of America. I work for Forex Capital Markets. And so, they basically had the numbers on the board of what the price is going to be. Hey, at the end of the week, we're going to have the euro at 125.32 or something like that, and we just press the button and push price to that. In fact, the whole chart thing is more. Banks regard charts as voodoo, right? Because they give you a sheet, and they just tell you what's going to be. This is the sheet. This is the sample sheet that we would get, and then you just press the button and push price to that, and get buyers to push it into that area, right? because it's a, you know, they call it the London fix. They actually fix gold, silver, and the euro. And you can learn more about the compound day trading blueprint and how we use that if you book a strategy call. But I don't have a lot of time. In fact, I'm spending an hour. Is this good stuff? Is it okay? Right? Let me know in the chat box. But here we go. Look at that. So here is our. So look, this is the 1 hour, but look at the weekly, and we have a Harami candlestick pattern. This thing is dropping like a rock, right? We blew the low out, and if we had our opening range breakout, which we did on a 5-minute chart, we go to 5 minute. We can switch as far as like compass. You want to be just 5 time frames above. So, for instance, if you're looking at a daily on this side, that or say weekly on this side, then you want to look at daily, right? So that's there's 5 days in a week, right? So you can see that we're coming up on resistance at a round number, okay? So we know that this is an uptrend, but overall we have a really massive downtrend, right? This downtrend is massive. We had that, right? And see that's that trend line, right? But we did have an uptrend. Right? So where an uptrend and a downtrend meet, now you have a triangle, right? But see, this is following this range, so we're looking at price going to the bottom of this range, right? So we have this, so weekly, daily. The next one you want to look at is make this your higher time frame, make this one your daily. So we click that, make that your daily. And then we want to divide that daily into 4 hours. So the 4 hour chart, what we look at, we want to compare those two, right? So now we're looking at the daily as our higher time frame chart. Remember, looking at two, one eye on the higher time frame, one eye on the lower time frame. You want to trade like a pirate, because if you trade like a pirate, you're not going to know, oh, this is an uptrend, and then you're getting crushed, right? Hey, look at that. Look at that big count, right? I mean, what if we sold it at market? What would happen, right? We can see what will happen, right? This is a paper trading account, right? So now we have a daily and we have a 4 hour, right? The other time frame we can look at is we can make this 4 hour and make this one 1 hour. Okay, so it's a factor of not quite 5, but it's close, right? We can go a factor of, so there's our 1 hour, right? So now that we're getting a completely different picture, we're seeing structure, we're seeing higher highs and higher lows. Now we're seeing lower highs and lower lows, and then we're seeing that prices is breaking down below a key level of support, right? We're looking at what's going on here, right? And we can still say, okay, we do have an uptrend, but it is, we broke this trend line, this 4 hour trend line we broke. And see, now we're making money, right? Because if you're looking at this, oh, Greg, this is an uptrend, Greg, there's higher highs and higher lows, right? We should be buying. It's like market structure. The structure people, it's like, no. Okay, so let me tell you another thing. So, well, Greg, 4 hour, 1 hour, that's kind of far away. So we can change this. We can make this 1 hour, right? And then we're going to drop it to make this one a divide that. Well, we can do 30 minutes, or you can do 15. You can do a choice. You can do that. You can do click here and make this like 15 minute, right? Because 4 times 15 is 60, right? So that gives us even more granular look at the move, right? And you see we're breaking down below support, right? And you say, okay, well, Greg, we got short. Where will we get out of this thing, right? Well, there's a couple of ways you can do that, right? Remember I showed you the Fibonacci? We can take a Fibonacci from the swing low to the swing high. And usually price comes back to the 38% retracement, right? So that's a possible price target there, 119.85. There's also this 200 simple moving average, which I have in all my charts, the 200. and that crosses the 50% retracement at 119.31, right? So that's a possible area of support that we could possibly get to as well, right? So that's so remember, mistake the traders, don't trade like a pirate, right? Now the other I want to talk about, the last thing that I want to talk to you about is trading with being undercapitalized. And I know how it is to be undercapitalized. It was easy to do back in the day when I was at Forex Capital Markets. In the US, we had 500-to-1 leverage. I could put in, $500, $600 and scale it to $3,000 or $4,000, withdraw it the same day. Those are the good old days back in 2009 and 7, 2006, right? But unfortunately, we don't have that leverage anymore. If you trade in a US broker, it's like 50-to-1. It's like cans and bottles. You're making $1 here and $1 there, right? You can go offshore and get a high leverage account with one of the brokers like Hugo's Way or Trader's Way or IC Markets. But I've actually had dinner with a friend who's got about $3 million in the market, a beautiful Nigerian lady. And one of the brokers would not let her, she wanted to buy a house, they would not let her pull her money out, only $5,000 a day. I'm like, they probably figure she's American and she's got all this money in the account. I haven't had any problems because I use an offshore company that I work for. So a safer way of getting money or having more leverage is to actually use a prop trading group, right? And I want to show you how you can do that. And one of the ones that I'm working with now, which is very cool, you can get $25,000 or $100,000. Instead of putting that $400 in a Hugo's Way account or a Trader's Way account and trying to scale that up, you could actually put that $400 and pass an audition. Now, what's great about Surge Trader is they have this wonderful audition where, if you made 10% in a day, you can start trading in 48 hours, which is huge, right? Because some of the others, you have to do 30 days for the first test and another 30 days for the second test. And then they finally give you access to capital, right? And I actually had one of my students pass the, he passed the challenge. And when he passed the challenge, he actually they gave him $200,000 to trade. And he took that $200,000 and he actually was able to make $47,000 in a single day. So he used to pay off his course, right? which was really cool because he just sent me this message, I'm like he says, thank you. I'm going, thank you. I mean, he just enrolled in June 9th, right? And then, so he said, thank you. Like, okay. I go, dude, you barely had money to get into the course, but he had a profit of $47,802.87. He was trading the NASDAQ. He used the system that I showed you to actually create, to generate $47,000. He had 1, 2, 3, 4, 5, 6, 7, 8, 9 winning trades out of a total of 12 or 11, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Yeah, 11. So he had 9 out of 11 winners for $47,802. He got to keep 80% of that. So he got to keep $32,000 of it, right? Which is is that cool or is that cool? I go, is that in fact, I was like dumbfounded. I go, $47,000 in my funding account so far, pipping and running. Okay, cool. So you're crushing it, bro. And I asked him, I go, is this, I go, do you get to keep a percentage of this? Because I really didn't know much about prop trading now that they have these. He says he got to keep 80%. He paid $1,000 for the account, passed 2 challenges, and it took him 2 weeks, and he got $1,000 back. He says, glory to God, I can't thank you enough. Praise the Lord. And so he used FTMO, which was a cool company. But one of the vice presidents of Surge Trader actually reached out to me and said, Greg, you're doing a lot of great things with people, and we're aligned. What you do is aligned to what we want people to do, to make money trading and to also be able to be well capitalized, right? So so I worked with them. I asked them a lot of questions. I didn't want to put my people into something that was going to be fly by night or go bankrupt or something like that, because you guys, I don't endorse many things, right? So I talked to him. His name is Corey Andrews, and so I said, look, I can send you a bunch of traders, but I want my traders to be paid on time. I don't want their money being held up. I want them to be able to have access to capital. And they said, and he answered all my questions, and I said, you know what, dude, let's do a partnership. So I put a link in the box there, $1 Million Trader, and you can actually check out Surge Trader. I can actually show you. I mean, look, make boom. Okay, as long as I close this out, right? Close position, and we make some money, right? So I it's paper trading, but just think about it. You pass an audition, you can do this, every day, for 4 or 5 days a week, a couple hours, and making money, right? Then is that cool or is that cool, right? And I want you to pass. I mean, I do. I mean, that's and you guys, if you are any of my students in the room right now, that my goal is to make all you guys millionaires. You know that. That's what my goal is. But let me show you Surge Trader. And I love them. I think they're the best thing since sliced bread. And I popped the link in there. And so there's like traders want it. They want volume. And that's what I do. I push people, I talk about my video that I help people so they can help push volume. I push $500 million by myself, and having more people push volume is what I'm about doing, and giving you the tools to do that. Now, I gave you just a sample of what, this one pattern out of the 6 of the pip and run system, the compound day trading system. Now, if you want to first of all, I'm going to, the first offer is the Surge Trader. I want to show you that, they help you capitalize. And that is the one thing that you guys struggle with. I struggle with having a really, really small account in the very beginning and blowing it up, another $500 here, turn it into Bitcoin, move it over from Coinbase, get Coinbase blocking it, sending it to the broker, and then make some money, press the wrong button, and then lose it all, then start over again, until I got my account, moving. Now I don't do that anymore, but I see people doing the same thing that I used to. And Surge Trader is the answer to that, guys, because for the money that you put into one of these accounts, $400, $300, is not going to move the needle. Because what you can do is, look, for $400, you can start trading with a $50,000 account, right? You just have to make 10%. You make $5,000. The moment you make $5,000 profit, then you pass the audition. And in 48 hours after that, you're given a live account, okay? Now, that is super, super cool, right? I wish we had that back in the day. It would save some time and years. But the great thing about it is you have me as a resource to help you pass these auditions and challenges, because we're gonna have a special offer for you guys to actually talk to one of our associates, and I have a really great program to help people pass these tests. And so, hey, guess what? You pass a test like Robert did, get $47,000, he gets to keep 80% of it. Here you can keep up to 90%, right? So you get to keep $47,000. You want to, paying off what for tuition, and living the life. You make $50,000 a month. I mean, come on, you do that twice and you're on vacation forever, right? Or at least for a year anyway. There's also there's different fees, $100,000 or $7 fee, and you just need to make 10%, right? And then there's the advance where you can keep up to 90% of the profit. Your profit target is $25,000 or 10%. You just got to lose less than 4%, right? And as you've seen a lot of my trades, and some of my student trades, 90% win rate and very low drawdown. All my students are going to be going through this, and you can too. And it's very, very, very simple. In fact, we have a special just for this, where you can work with me and have access where I do have a special 6-week course that is so basically it's gonna be $2,500 for that course, right? For that, to help you pass this challenge, and then we're gonna include that starter account with that, okay? So I'm going to give you the link if you're interested in participating in that. Let me go ahead and give you a link to talk to our people if you would like, and we can get you started on that. But this is great because money management. I teach people how to do, keep your risk management under 4 or 5%, and which is right in line with their loss limits. Don't lose any more than that. And hey, you don't have any time limits when you can get this done. The faster, the better, right? And why wait? Why keep struggling with I got $100 in my account or $500 in your account or $1,000 in your account when you can take a shot at this, pass the audition, and then have this to work with, and being able to and oh great, they'll pay you through PayPal or Bitcoin or wire to your checking account, and you get paid you can get paid anytime as soon as you hit the targets the first time, and then 30 days after that. And so there is just 2 steps: the audition and that's it before you start trading. That I would do it. I strongly advise that you do this with my help. Get my help to pass it, because that's what I want you to do anyway, right? And I've been doing this for 27 years, and I can, if I can take him from June 9th to July, it took him a month to be able to pass the tests and be able to qualify. What can I can do with you, right? So I'm gonna give you the link if you want to talk with my team. We'll on that breakthrough strategy call, we'll answer we're going to ask you some questions about where you are and how we can help you, and then give you a clear blueprint on how you can pass this audition. And then if you want to work with me further and want to take me up on my offer, just ask them how, and then we'll be more than happy to help you out. Okay, because this is a fantastic opportunity in partnership with Surge Trader, and being able to because people say, well, Greg, I got to pay all this money for tuition, I don't have any money to trade. Well, this solves that problem, right? Because I'm going to give you a reduced tuition scholarship, and you're going to be able to have a larger account to trade, so you can live that lifestyle that you want, being able to do what you want, go where you want, to fire your boss, and be able to make an impact in life. That's what it's all about. And then I'm looking for, I'm going to give you the sign up link so you can schedule a call. And the sign up link is here. Copy link and pop it right here, right? And then so just go ahead and pick a time, choose a time and a date that works for you, and and be there, be on time, be ready to go to get started, to talk, and to get your questions answered. And if we're a good fit, I'm just going to put it on the screen. Also put it in there in the chat box as well. So long, I should make this into a shorter bit.ly or something, right? Yeah, I can get a second to do that. But tell me in the chat box if you found this useful, the information I gave you about the opening range breakout, about how not to trade like a pirate, some things that have resounded with you, that this hashtag nugget, what you can take from this to help you in your trading. And if you're interested in having more trainings like this, in fact, I want to see, are you guys still here? 40 guys, you still here? Oh my goodness. All right. Yeah. So let me go ahead and yeah. Let's go ahead and let me do this. Can we? Yeah. If you click that link and put your email address in there and fill it out, then we'll have you down for the recordings, okay? Because when you sign up, there should be like there'll be a box. In fact, let me do this. I'll show you. They're like, well, Greg, can you show us how? I'm like, yeah, that'd be a good idea, Greg. Do that. Oops. I have to remind myself, you get to a certain age, you got to start, hey, Greg, you need to do this. Yeah, that's a good idea. Okay, so we're going to go here, breakthrough strategy call. Okay, so you're going to choose a time and the date. What's going on here? Okay, so let's say you click the 30th or something like that. Continue Central Time, right? And then there's questions. Okay, where it says type. Okay, where it says okay, you don't have to click any of this, but where it says there are only a few spaces available, type in that you were on the webinar. Okay, say I was on the webinar. Okay, when you type I was on the webinar, then we know to send you the recordings. Okay. Oh, Marie says very informative. Would love more trainings like this. Awesome, full of experience. Thank you. Yeah. Oh, link in the chat. I'll put the link in the chat again for you. Yeah, just there you go. Right. So just go there, and that will that way, again, we can go ahead and get you those the copy of the webinar. So I was on the webinar. Oh, I was on the webinar. I was on the webinar and would like a copy of the result. Okay. And then we'll go ahead and press the record button. Yes, I did. Okay. Fantastic. Okay. So, yeah. But you want to put this in, you want to go to this link though. Go to this link though and do that. Okay. Jerry? So you want to click the link, pick a time to talk with us, and then put that at the bottom, and then that way we'd know. Okay. So go to the Once Hub link, and then fill that in, and then at the last comment you want to put that there. Okay. So make sure you do this here. Yeah, request it here. Okay, on request at that link. Right. So go to the Once Hub link. You are so very welcome. So happy to share with you guys. I wish you much success in trading. If you want to find out more about the Elite Traders University, go ahead and click that link that's in there. I'll pop it here again, and then and that's where you would also request the link as well. Okay. Again, my name is Greg McLeod with the Elite Traders University. Check out my market heat map. It's an arrangement of currency pairs by percentage change. Tells you what's hopping, what's popping, what's dropping, and what's not too. I'll put the link in the chat. Yes, I will put yes. There's a link, right? And then, in fact, you can look at see what's going on. Look, dollar CAD top spot, and also they're selling off. You can even come here and you can look at the heat map for free at mymarketheatmap.com, right? Okay, yeah, make it. You got to go to the link if you want the recording. Click this link and fill in the information, and the link will be sent to you. Okay. Thanks so much, guys. Love you. Ring that bell. Make that money. Remember, Surge Trader. Oh, let me show you too. I got the Surge Trader account open, right? Do we have it open? Come on. I want to just show you what $1 million account looks like, right? And really? Yeah. All right. So there you go. $1 million. Oh, it's not showing up. Oh, the link's not showing up in the chat. Oh, okay. Let me try that again. How about that? Okay. Let me put in the Q&A too. Let me answer. No? Okay. Let me see if I can I'm gonna make a link. Let's do that. I'm gonna make a shorter link. I keep putting in there and it's not showing up. I don't know what's up with so I'm gonna create a link. Links. What? Okay. Create a link. We don't see nothing. Okay, hold on. Okay. I'm gonna make a short link here. Create new link. Link path. I'm gonna pay. Okay, I'm going to create a link. Create, and then we're gonna make this a short link. Edit. Talk with Talk with Greg 2. Talk with Greg 2 bit.ly, save it. Okay. I'm going to copy it and then I'm gonna put it in here. Okay. Let me do this. Control V. Really? Make this smaller. 48. Okay. So bit.ly talk with Greg, right? bit.ly/talk with Greg 2. Okay. Yeah, Mm-hmm. Okay. Yes. Okay. I don't know why host. Oh, I know why. Everyone. Sorry. Here we go. My mistake. My bad. Here we go. There we go. Can you click that? Can you see that? Whew. Yeah, I had set on panelists and hosts, right? Instead of everyone. Don't worry, I trade better than I use technology, right? Well, I look forward, guys, to seeing you. Remember, bit.ly talk with Greg. Again, I was showing you something. Yeah, was I showing you? Yeah. This is my Okay. You're quite welcome, Joel. Okay. Make sure you sign up, and at the bottom mention, hey, give me the recording. Right? That way we have your information, right? And like the market right now, see, we took that pound dollar short. It's still dropping, right? Yep. Drop to the next level. See, it's like an elevator. Yeah. So you learn that strategy, and then we'll get you that opening range breakout indicator too. Right. Hey, Corey, go ahead and just send it. Put your information in there at that link. Fill in that information, and we'll send you the recording. All right. Again, that link is bit.ly/talk with Greg 2. You're welcome, Corey. Thanks for coming. I really appreciate you guys coming up and showing out like that. Amazing. And makes me fired up to want to do another one for you. And let me know also too if there are other topics you want to learn about as well. And we can do this like once once a week or every couple of weeks, and to help you guys out. I really enjoy this. All right, guys. All right. So with that, I'm going to say good night, goodbye. Thank you, Nichelle, for helping out, and we'll talk to you later. Cheers. Bye.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!